on Thursday, the 23rd of July, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much news overnight to report. The Reserve Bank of New Zealand cut rates by 25 basis points to 3% as expected. Some further easing seems likely. Further drop in New Zealand dollar is necessary. Amex reported $1.42 versus $1.32. Earnings revenues missed, came in at $8.28 billion versus $8.43 billion. It was down 1.5% after market. Qualcomm reported 99 cents versus 95 cents. Revenues at $5.83 billion versus $5.84 billion, so it missed on revenues. It cut its fiscal year revenues and EPS guidance below consensus. It was down 1.3% after market. Initial jobless claims came out a half hour ago. 255,000 versus 278,000. This is the lowest initial jobless claim since 1973. 1973. Continuing claims 2.207 versus 2.23 million. Everything is A-OK on the employment front, it looks like. Looking ahead today, not much on deck. We have 9 o'clock Central, 10 Eastern, European consumer confidence, expecting negative 5.8. At the same time, we have leading index, U.S. leading index, expecting 0.3. And then we have natural gas at 9:30 Central, 72 billion cubic feet. And then at 10 o'clock, we have Kansas City Fed manufacturing activity expecting negative 5. As far as speakers, we have Kerry, the Secretary of State Kerry, and Liu at the Senate on the Iran nuclear deal at 9 Central. And then at 9:15, we have ECB Speaker Weidemann, who's a hawk. We'll be discussing the capital markets in Frankfurt. After market today, we're getting AT&T at 64 cents, Visa 58 cents, and Amazon at 84 cents. Let's switch gears to the tech stuff. Interesting day yesterday. Can't say it's a fun trade, but hypos are working out as expected. So those in attendance yesterday, recall the expectation was for the market opening in a gap. We looked for responsive buying, and as I said, the trend is likely to continue lower. Responsive buying looked for resistance initially at 11, and then 1275 being the point of control. We did get responsive buying from 2103.75. If you recall, we were looking for the prior day's move, impulsive move down, to continue itself down to 2103.75. So the prior day's move was expected to push down to during the day session to 2103.75. And unfortunately, that was taken away overnight. And that happened to be, this price happened to be the opening price. And then we were looking for the retracement back to 2112.75. You can see how methodical this auction is. Couldn't quite make it. It missed by 3 ticks. It did push against the 11, which was the initial resistance was expected to be 2108. Which was the gap zone low. The gap zone high is 2111. I'll show you where that came from, so you know where this stuff is coming from, as opposed to just having me spout out a bunch of levels. So here's the gap right here. The gap is 2107.75 to 2110.75. And what happened the prior day is we pushed down into 2108, so we missed the gap zone low by a tick, 2108, before we bounced up. And then yesterday, we we bounced back up towards the gap high. 21.11 was the price, 21.10.75 gap high. We had a very small response there, and then it continued higher by 4 ticks. So you could see here 21.11 right there. 21.11. We had a small response down, then it pushes through by 4 ticks. Then we get a very small impulsive move or quick impulsive move. We get the pullback to mid. Here's the mid, and we get the continuation move down, very small also. Then we go into balance. We rotate up through the mid, so now we're in the noise, and then we have another impulsive move down 5 points, and so we are expecting a continuation move lower. Overall, the the target below the target of the expectation of it getting responsive buying, and then ultimately breaching that and starting to move lower. The next level down 2101, big level below 2093 were the key areas. That didn't go so well. That didn't work out as planned because there was no incentive for sellers to keep stepping in, it seemed, but we did fulfill the IB stat. The IB stat says the first hour's high or low are likely to be breached 97% of the data set being 1,400 days of looking back. It is very, very rare to get what's called a normal day. A normal day is one where the initial balance high or low, the first hour's high or low, which was set right at the open. This is the first hour, high, low. It's very rare that neither one of these is broken, just like it is very rare that the overnight high and the overnight low stay intact in the pit session. So that was a statistic we're looking for. We're looking for which side is it likely to break. It did that right here, and it ended up with a close right in the developing value. Note that the point of control, which is right here in pink, VWAP, which is right there in cyan, and the mid, which is this blue line, that's faint blue line, you can hardly see it, right there. All of them ended up right against each other, another sign of balance. And also we have a very balanced profile, pretty good kurtosis in the middle. The expectation from here is a reversal and potential push the other way. So I hope all that makes sense. That's I'm squishing in a lot of auction knowledge into a short video here, but it's very important to understand how this is working out. Despite the push we had yesterday on the open, we basically did not have a very active delta. You could see here that we did have some buying delta, but really the rest of the time we're just kind of just sitting sideways or down. There wasn't much response there wasn't much aggressive buying on this trade yesterday. Very quiet. The surprising thing though yesterday, 1.05 million contracts traded. Given the lack of action, the volume was in line. So that was kind of odd. There was no real clear reason for that. But in either case, putting it all together. So let's look at where we are. Let's remove this, pull this back here. So when we look at what happened since the gap, what we've done is pushed to 21.26, right up here, new all-time highs, and we have pulled back. And we've had a pretty decent pullback so far. When we throw a fib on here, which I've erased, of this move up, 50%. We pushed through a little bit through the 50% yesterday on our open, 50% being 21.05. We haven't retraced all that much. We did close the gap, And it looks to me, personally, the pieces when you put the pieces together, it looks to me we're more likely to test this this point of control, the new point of control that we've put in on this balance zone, than to continue lower. So the expectation for today is that we're likely to open up, uh, get a pretty choppy, quiet open, and the expectation is for it to push through the overnight high towards that point of control, the MC point of control, and to start to retest some of these areas above, more so than it moving to 93.75 right away. 93.75 being the key high volume node below. Secondary high volume node is just below it at 89.87. And then we have a gap zone. This is a gap zone that remains open. So today, primary hypothesis is to take some of this selling back, and I'm looking for 21.14.5, 21.15.50 test for today. Expect it to be a pretty slow trade today. That's all I have for the ES. A quick look at Europe. Europe gapped up. This is the Euro stocks. 50 Europe gapped up and then has come back to balance and is trading in balance. You can see the point of control of today's session is right in line with the prior days, which is almost in line with the day before that. You have this MC MC point of control for this area. I expect that this is likely to retest this 36.75 in the Euro stocks. We are in balance here, but I do expect it to retest 36.75 before the next step, which is likely to start moving down, back and down towards the LVN below. Same with the ES. It looks like, to me, it looks like the high is in for a bit. That changes once we get through in the ES. That changes once we get through the 21.15.50 and then get back up to 21.20, 21.21 and take it out. Crude has been an interesting thing here. My prediction on crude was a rally last month, and it's just kind of fell flat on its face. That was totally wrong. But crude being a fundamental product being pushed around with the Iran deal and so on, the market's still expecting more supply, but the bigger thing that's pushing crude around is currency. We're seeing the same reaction in crude as we are seeing in other commodities. Canada being a country that is commodity driven, has the currency for Canada has hit a 6-year high, $1.30 Canadian versus $1 US. A year ago, the currency was at par, essentially 30% premium for the US dollar, and given the exports in Canada being in uranium and gold and silver and various metals as well as energy, their currencies representing what's happening here in crude oil, in my opinion, which is just a strengthening dollar. So crude, total failure there on my expected outcome of that auction. And then the tens have been pretty decent trade. Really much easier, in my opinion, to understand and look at than indices right now. The tens yesterday had a pretty good swing down. They pushed right into the point of control the prior day. Trend day before that, they pushed right into the point of control and then finished this impulsive move up. And then they start to do their corrective move, which today it's continuing to do. It's coming back into the balance zone, so we start to now expand the balance zone forward. The next area down will be the point of control unless something changes with regards to interest rates. Anyway, I'm over my time. I want to remind Stage 5 traders that we have our webinar at noon today Central, and I'll talk to you all tomorrow. Tomorrow I'll do the Trader Bite in the morning, but I'll be gone in the afternoon to take care of some family stuff. Have fun. I'll be back in Chicago on Sunday night, and we'll be back to a normal schedule on Monday. Take care.